Buenos días a todos. Guten Tag. Bonjour à tous. And good morning from Chicago. Thanks for joining me today. It's 8:01 a.m. Chicago time on Thursday, the 27th of September, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. An interesting thought yesterday, it was pointed out to me, the analytics on the Trader Bite. Just a huge diversity of traders from all over the place. Hong Kong, New Zealand, Australia, Singapore, Israel, Egypt, Cyprus, Turkey, all over Europe, US, Canada, Argentina, Brazil. Love it. Just love the fact that so many are coming together to trade. Just awesome. Thank you for joining. This morning, the sentiment overall is not. It's not really all that changed. You know what would be cool? If you see the chat in front of you, the YouTube chat, it would be awesome if you can put your country in there, or city and country. That would be really cool. I'd love that. Anyway, back to the markets. Enough dilly-dallying. Crude oil leading the pack today. Crude breaking to the upside, up 1.1%. And 78 cents, trading at 72.36 on a November contract, the X8. Followed by the US dollar, which is up 59.5 cents, or 0.64%. The NASDAQ is stronger this morning, 27 points. The US indices are a little bit stronger today, but they're still inside of the big sell-off. Dang, look at that. Just awesome. But they're still trading inside of the range of the big sell-off following the FOMC, and that's where we are. Slightly higher than where we closed yesterday on the U.S. indices. Gold is a laggard, down $10. In the overnight, there was a bit of a drag on the European markets as the Italians, still fighting over a budget, were unsuccessful. It looked like they were not going to make it, and the minister may have to step down, causing further destabilization there. So that's where we stand. It's coming into today. Really, the biggest numbers are behind us. We did have a large slew of numbers, the key of which was the GDP annualized Q on Q, which came in pretty strong. Core PCE, advanced goods, durable goods, and initial claims all came in. And we're still waiting for pending home sales, which comes out at 10 o'clock, just a half hour after the open. But also keep in mind, we have a ton of speakers today. We did have BOE's Haldane. And at 8:30 Central, 9:30 Eastern, right at the open, we have ECB's Draghi coming out of Frankfurt. The text for his speech is on the ECB website. We have BOE's Carney, ECB's Prate, Fed Speaker Kaplan at 2, and we have Fed Speaker Powell at 4:30 Eastern. So what is the point of all that? There's just a lot going on today in terms of potential interruptions to the auction, in addition to the yet again heating rhetoric regarding Iran, which is impacting crude oil prices. So that's where we stand. Here's what we expected yesterday. So those of you who were here yesterday, it seemed like I was kind of stepping aside from the responsibility of calling out the primary or secondary scenarios, but really Yesterday with the FOMC, what I outlined as a pretty choppy trade most of the day. And I said after the FOMC, the key, if we move upwards, the key targets are 29.36, 29.38 and a quarter on the upside. The downside, 29.07 and 2900 to the downside. And it's a beautiful thing, although it's pointless. It doesn't serve more than just an ego boost. But top of the day, 29.36, just where we expected it on the upside. And then to the downside, 29.0750. Missed the hit the top side on the tick and missed the downside by a couple of ticks. 29.07. I did not move my stock zone. The stock zone is from 29.07 to 29.0775. So right there, and then the market just slammed the brakes, and we went sideways into the close. We did not transition the point of control down. A lot of structure yesterday, good volatility, and what we see yesterday is a market that went neutral extreme down in an up market. Out of balance, has some very bearish connotations, and we have some clear structure above. Now, I want to take a moment and show a market profile chart. You don't see these often. So looking at market profile just for the RTH session, meaning the pit session, we can see a clear outline that shows singles below. We had an excess above, pretty good high above, with singles below, and the market just redistributed to the low side on the close. Long liquidation into the close there. And for those of you who are wondering why this is, there was commentary at the end of the FOMC interview with the chair that where he had indicated that the market is trading high by historic valuations. It's not quite irrational exuberance at this point, but it's kind of hinting this way. The accommodative language has been removed. And so the market's looking at that and saying, all right, well, down we go, as the potential cost of borrowing is likely to continue higher, and the participation in the market by the Fed is not likely to continue. So this morning, with that being said, we have a very clear market that showed really good consensus throughout the session. 29.27 holding as the point of control, could have easily moved down 29.26 or so, and then a secondary distribution at the low, and we are trading in between. We are currently trading right here at 29.16. So we have the singles at 29.20 or so above us, and the yesterday's IB low, yesterday's mid, all clustered in that area. The overnight session shows a nice drift up on the reopen into the Asian session that sold off a little bit, and then the Europeans started right here, and Europe tested down and has shifted up. With the ES moving in sympathy. Pretty good volume. If you look at the volume yesterday, or the extended hours, 180,000 contracts, higher than 110, 120. That is the mode for the overnight session only. And the profile shows that it's pretty well traded throughout. So expecting further volatility today, or pretty decent rotations today as we come into this session. What have we done in the big picture? We broke this channel. We pushed up, pulled back, consolidated, gapped up, new all-time highs. The old all-time highs at 29.2250, and then we have dropped down in a gap, consolidated. Yesterday we filled this gap and moved to the point of control of these 2 days. We moved right below the point of control of those 2 days, the MC point of control, and then sold off. That's where the 36 comes from. And we sold off, and what we had is a kind of a bearish engulfing day of those 2 days. This is likely to continue lower given the configuration of what has happened yesterday. I mean, we clearly tested up and we found sellers, but it's hard to tell at this point if the sellers were found on news, and therefore we have an SOC that is likely to be challenged at some point, or if it's truly the auction under its own power coming up, finding sellers and selling off to close at the lower end of the range and below the 2-day bounce. This configuration right here on its own, technically, using auction theory, technically is bearish, and it's likely to retest below the 2900, probably somewhere around 28.96 or so, and so that's how it's setting up. But like I said, we're operating off of news and the market. You know, we need to know what is the likely catalyst in this situation. Not always, but in this situation, is it news based and we're likely to drive back up, or what? This morning, I'm going to go with what the auction shows, and that is this morning likely an open auction that is likely to drift up into this 29, 20, 21 area, looking for an impulse down, a large move down, looking for it to consolidate, and then looking for the overnight low to be taken out and for yesterday's low to be challenged down to 29.07 to finish back in range. That's the primary scenario. Okay. Secondary, assuming participants see these prices as low and the move is on news and the news has been absorbed. Open auction that starts to drift down into yesterday's close. Close that, touch the close, consolidate, burst out, give us an impulse higher, find resistance at 29, 20, 21, consolidate for a bit, and then start to walk its way back into yesterday's point of control and accepted value. Opposing views. Okay. In the scenario where we have an open test drive, whichever way the drive goes, that's likely going to carry the day. So if we get an open test drive, do not fade it. What does that look like? I'm going to draw it in white because I don't want to assign a scenario to it. But if we open, for example, we open and we test that single, this area, and then we drive down. In other words, opens and then drives. This means high volume, strong impulse rotation, and it drives down. Do not buy this. Like, you're just betting very, very poorly if you buy it. If it opens, tests, drives up, and this happens early on, right? Just a small consolidation, test, drive. If that happens early on, if it pushes up, if the drive is upwards, in other words, you see volume coming in on the buy side with a big rotation up, don't be an idiot and sell it. It's likely to carry the day in that direction. That's my point. You want to sell it as it's driving up, more power to you. You're giving fills to people who know what they're doing. Don't do it. Don't be that person. Okay? I'll leave you with that. I don't want to confuse the point. I'll leave you with that. Thanks to all of you who put in your location. I love it. It's awesome. I'm going to go through and just look just to become familiar with some of the names. Thank you for joining me here, and hopefully you're walking away every day with some idea of how to bring yourself closer to your goals. Good luck.